Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, with your Money and Markets week ahead. What to watch on Wall Street. Last week was relatively quiet for investors, of course, aside from GameStop's hearing in Congress and Bitcoin hitting $50,000. But other than that, it was fairly quiet. Now, earnings continue to wind down this week, and there's a tentative SPAC IPO on the horizon. Here's some of the things to look for on the week ahead here in Wall Street. There's really only one initial public offering scheduled for the calendar this week. It is tentative, but it's fairly certain that it will price this week. MCAP Acquisition has tentatively scheduled its IPO for February 23rd. It plans to trade on the NASAQ under the ticker symbol MACQU. Now, MCAP Acquisition is a special purpose acquisition company, or SPAC. Another term for these kinds of companies are blank check companies. It was formed by Monroe Capital Corporation, which trades on the NASDAQ under MRCC, with the intent of targeting private technology companies for reverse merger and public listing. Now, MCAP Acquisition is led by heads of Monroe Capital, CEO and Chairman Theodore Koenig, co-presidents Zia Udine and Mark Solvey, as well as CFO Scott Marino, are all going to be taking the reins of MCAP Acquisition. As of September 30th, 2020, Monroe Capital, the parent company, had more than $9.1 billion under assets under management. Now, the Chicago-based company intends on raising about $250 million by offering 25 million units. I'll explain that in a second. Units for a price of $10 per unit. Now, according to Renaissance Capital, one unit will represent one common share of stock and 1/3 of a warrant. Now, that warrant can be excisable at $11.50. If all things go to plan, MCAP Acquisition would have a market value of around $313 million. Cowen right now is the only book runner on the deal. So relatively small IPO by comparison to some of the others we've talked about. But still, again, it kind of illustrates how strong the SPAC market is continuing to go off of its 2020 highs. Now, to take a deeper dive into earnings this week, I want to take a look at Nvidia Corporation. Now, earnings may have slowed down this quarter, but there are still some large, well-known companies yet to report. The big one this week, to me anyway, is Nvidia Corporation, trades on the NASDAQ under NVDA. The company will report its quarterly earnings on Wednesday. The company focuses on personal computer graphics processing units, and artificial intelligence. It's become a very big player in the AI game, with big companies using its processors to help process data and information. Its stock has been on fire since coming off of a March 2020 coronavirus crash low. In the last 12 months, Nvidia stock has climbed more than 100% compared to the broader semiconductor manufacturing industry, which has only grown about 50%. Nvidia's balance sheet weathered 2020 rather nicely. The company reported a 49% increase in its revenues for the 39 weeks ending October 25th of 2020. Its net income jumped 56% to $2.8 billion over the same period. The company's consistently improved its earnings per share and revenue in each of the last 4 quarters. Forecasts for Wednesday's earnings are for earnings per share to be around $2.80 per share on revenue of $4.81 billion. I like the estimate, but I think Nvidia could actually beat it. I realistically could see it closer to $3 per share of earnings on about $4.85 billion in revenue. Where that falls, who knows, but I can certainly see Nvidia being a tech company that can beat out Wall Street expectations. Regardless, Nvidia's stock continues to rise, and I don't see that stopping anytime soon. As a pro tip, just to let you know, Nvidia ranks a 68 overall on Adam's Green Zone ranking system. It ranks 99 on both quality and growth, and 73 on both momentum and volatility. Now, on Thursday, in terms of looking at the data dump, the Commerce Department will reveal real consumer spending for the month of February. The report measures inflation-adjusted amount of money spent by households in the U.S., and this report covers both durable and non-durable goods. So not only does it cover your buying a refrigerator or a dishwasher, but it also covers food. So it's kind of a broad-based look at how much money consumers are spending during a particular set of time. Now, spending in each of the consumer spending actually saw its biggest dips in 5 years during the months of June, July, and August of 2020. Spending in each of those months dropped more than 30%. Those drops were preceded by 7 to 8% reductions in spending from April to May, right at the height of the coronavirus pandemic. So as you can see, the pandemic really took hold as lockdowns increased, heading into the summer months, as fewer people were taking vacations, things like that. Consumer spending started to drop, and it dropped pretty strongly. Now, it has picked up and ticked up quite a bit in the months leading to the end of 2020. But again, you have to consider that those spending upticks are measured by their spending downward trends as well. So a big tick in spending is really only measurable and considered a good thing if the preceding months were also high. And in this case, they were not. They were kind of just basically rebounding from a huge spending cuts during the coronavirus pandemic. Now, to look at the numbers another way, you can look at the Federal Reserve's personal consumption expenditures report. This measures the prices consumers in the U.S. pay for goods and services. So you can see how much they spend, but you can also see how much things they're spending their money on. From 2019 to just before the coronavirus pandemic in 2020, the rate of personal spending was actually increasing pretty steadily. It dropped from a high of $14.8 trillion in February of 2020 to $12.1 trillion in April. And it also matches up with when real consumer spending started to fall. Personal expenditures rebounded to around $14.4 trillion in December of 2020. Expectations for consumer spending for the report that comes out this week are for about a 2.5% drop-off. Now, to finish off the money markets week ahead, here's a look at some of the key earnings reports that are due out this week. On Monday, Berkshire Hathaway Incorporated, Palo Alto Networks, and Diamondback Energy will all be reporting on Monday. Tuesday, Home Depot, Square Incorporated, and American Waterworks will be amongst the companies reporting Tuesday. Wednesday, we have Nvidia, which we've already talked about, Lowe's Companies, which owns Lowe's hardware stores, and as well as Rent-A-Center. They will be reporting on Wednesday. On Thursday, we've got Salesforce.com Incorporated, Moderna, which would be interesting to watch in terms of its Q4, its quarterly spending and quarterly revenues. American Tower Corporation and NetEase Incorporated will all report on Thursday. And then on Friday, DraftKings and Foot Locker will be amongst some of the big names reporting on Friday. That's all for me this week. Until next time, everyone, I am Matt Clark, research analyst for Money and Markets, hoping you all have safe trading.